Okay, hi grade 10. So in today's video we are going to do income statement from the top until the bottom. So please make sure that you watch the entire video so that you will understand each transaction that we are going to do. So please make sure that you have subscribed and like this video because there is more upload that is still coming that is going to teach you more. Alright, so let's start with our question paper that we have. So this is the question paper that was written last year 2022, if I'm not mistaken. Okay, so it was question 3, income statement. The information below was taken from the books of Romeo Traders. Their financial year end on 28 February 2018. Romeo Traders use a markup of 100% on all merchandise sold. In other words, if the price is 100 rand, they are going to sell it by 200. If they purchase by 100, they sell it by 200. Simple as that. Okay. Then the required prepare income statement for Romeo Trader for the year end 28 February 2018. Okay, 52 marks. So that's a lot of marks, guys. Okay. So we've been given a trial balance. We have balance sheet account section as well as nominal account section. You know that most of our income statement components, they fall under nominal account section. Okay, as you can see here, I already drafted expenses and other income that we have, but you have to make sure that you know this format because sometimes they're not going to provide you some other information. Okay, I just want to make this lesson as easy as possible. Okay, then let's go to our adjustment. Okay, adjustment number 1, they said that the sales of merchandise on credit to MK Jonas for amount of 4,500 was not recorded. So this is a sales amount. So a sales amount was not recorded, which means that we have to make sure that we record. Okay. And number 2, I want us to read number 1 and number 2 so that we can go back to sales and cost of sales amount, because number 1 and 2 is affecting our sales and our cost of sales. Okay, so number 1, obviously we're going to add it into our sales amount. Number 2, a credit note was issued to Joby in respect of goods returned. Okay, the other client returned a good, which means that we have to go and subtract, but we have to use a selling price under sales. Okay, then under cost we have to use a cost price that was given of 7,500. This transaction was not recorded. Okay, now let's go back to our nominal account section. Okay, a sales amount that was given is 625,000, 625,800, I think it's 850. Okay, it's a start point, the one that we have to copy under our nominal account section. Alright, then after that we have to check if we have debtors allowance. Yes, we have it is 17,850. Debtors allowance means that a customer return, which means that we have to do what? Go and subtract it under sales. Okay, it's 17,850. And remember, transaction number 1, there is another client that returned but is not yet recorded. We read transaction number 1 is 4,500. Alright, this is not a customer that returned, but it's a customer that purchased on credit, which must be added. Apology for that. It must be added. 4,500 must be added. But we're not done. We still have transaction number 2, guys. Remember, transaction number 2, they said a credit note was issued to J Road. This is the one that has been returned. Okay, they give us amount of 7,500, but that 7,500 is a cost price, which means that in order for us to determine the sales or selling price of that amount, we have to use markup of 100%. How are we going to do that? Very simple. 7,500 multiplied by markup is 100 plus 100, which is going to give us 200 over 100. This amount is going to give us, I think it's okay. Let me calculate to confirm. It's going to give us a 15,000. Okay, It's a double of 7,500, which is going to give us 15,000. It's a minus because it has been returned. Okay, it has been returned. So after that, we can now close this bracket. You calculate everything, then you will get amount of 597. 500. Okay, then after that we go to cost of sales. Now a cost of sales, our start point, we get it from our nominal account section is 625. Apologies, 309. 309. Okay, 1,000. And after that we subtract and add any payment or any return that has been made. We're going to subtract any purchase that has been made. We're going to add, but in this case you have to use cost price, not selling price. Okay, then let's check. Number one, we have the one that has been returned of 7,500. Remember, we convert it into selling price because it's a sales, but cost price we will record it as it is 7,500. Okay, then after that we have another one, which was transaction number one, a purchase of 4,500. How do we convert 4,500? Remember, 4,500 is a selling price, which means that now to go back down, we have to say multiply by 100 over 200. Now 200 must come on bottom because we are going down. Okay, then if you calculate this, it's gonna give you half of that amount, which we have to add because it's a purchase. They purchase, the customer purchase, which is going to give us 2250. Okay, then after that you close the bracket and you did calculation, you're gonna get 303,750. 303,750. Make sure that your cost of sales is on brackets because it's a minus. Okay, it's an expense. It's like an expense. So now we have to calculate a gross profit, sales minus cost of sales, which is going to give us amount of 293,750. Simple as that, guys. Okay, then we have other income and we also have expenses. Okay, now let's start with our transaction. Okay, let's just proceed with our transaction number 3. Transaction number 3, they say the owner had donated stock worth 5,200 at cost to an old age home. This transaction was not recorded. A donation, guys, is an expense. Okay, so if they give you a selling price and cost price, make sure that you use a cost price. Okay, so in this case they already give us a cost price, which is 5,200. A donation is under expense, 5,200. Okay, but you also have to check on your nominal account section if you have any other donation. If you have any other, you're gonna open a bracket and add them together. Okay, then number 4, a content of Romeo trader did not reverse a stationery on hand from the previous year. Okay, this is a follow-up of number 5. A physical stock taken on 28 February 2018 revealed the following on hand: a trading stock and stationery of 800. So we have to adjust that. Alright, so a stationery, guys, is very simple. What you have to do, you take the opening balance plus the one that you have under nominal account section. Opening balance, you're gonna get it under balance sheet section. The one during the year is under nominal account section, and the closing balance is the one that we read under a transaction. You just add opening plus a nominal account section one and you subtract closing. Simple, 4 marks for free. Okay, a stationery, let's open it. Let's check opening balance. Opening balance under balance sheet section, it was, let me check. Okay, let me check quick. The computer is a bit freezing, but I'm gonna fix this quick. Okay, it was 300. Stationery 300. Okay, plus the one under a nominal account section, which is 1,800. Okay, and after that we're gonna subtract 800 that we read under transaction. Simple as that. Okay, then after that it's gonna give you amount of 1,300. 1,300. Okay, so we must first adjust all the transactions that we read, then the rest of expense is a copy from nominal account section, which means that they don't have any effect. Okay, then the following transaction is number 6. Okay, Bidilana, a data who owe Romeo trade a 7,100 was declared insolvent. If a person declared insolvent, means that the company has given up, that this person is not going to pay us anymore, which means that we have to do what? To write off that person. Okay, he transferred amount of 21,000 into a bank account. The balance must be written off, which means that from the amount that he owed of 7,100, he managed to pay 2,100, which means that a 4,900 he didn't manage to pay it. Is going to be written off as a what? As a bad debt. Okay, what is bad debts account here? Bad debts, bad debts, bad debts. Okay, let me just edit here. Bad debts. Okay, a bad debts, of course, we are going to open account. Okay, so remember the one that we read from the transaction, he was owing 7,000, but he managed to pay 2,100, which means that the rest of 4,900 must be written off. And then we have to check if we have any from our trial balance. Let's check. Yes, we have of 1,035. Okay, which means that from there we have to calculate. It's gonna give us 5,935. 5,935, 5,935. Simple as that, guys. Okay, then let's proceed. The following one, they say depreciation of 16,350 must be provided. Of course, we have depreciation account here. We're just gonna record the one that they give us is how much? 16,350. Remember, under grade 11, we also had fixed assets account. You must at least know how to calculate a depreciation. So if you check on the playlist for grade 11, you will find some videos that can assist you to calculate depreciation using a straight line method and diminishing balance method. Please go and check on my channel. I provided those videos already. Okay, then we have a transaction number 8, a rent received up to end of April 2018, taking into account that the rent increased by 10% from 1 September 2017. Okay, so this is a rent income because we receive. So we must first check how much do we have at the beginning. 22,000. Okay, we open bracket 22,000 and how much? And 200. Alright, so this one, of course, I'm going to show you on a calculator so that it can be easy for you, because it seems to be more tricky because the rent has increased by a percentage. So this is what you have to do using your calculator, a scientific calculator. Okay?
Okay guys, so this is what we need to do. Remember, the rent before increase we have to count a month, a rent after increase we have to count a month. Please make sure that you do not mix those months. Okay, so if you check, let's go back to this question paper. If you check, the rent has increased from 1 September, which means that, remember our year starting 1 March, which means that from March to September is before. Okay, it's gonna be 6 months if you count from March Okay, it's gonna be March, April, May, June, July, August, September. We don't count it because it's on first. Okay, it's gonna be after. Okay, then it's 6 months from before, and for after is September, October, November, December, January, February, March, and they said it has been paid up to April, which means that it's gonna be 8. Okay, so this is what you need to do. You have to say a amount of 2. Okay, amount months before increase, which is going to give you 6 months, plus months after increase, which is going to give you 8 months, and you open a bracket. It has increased by 10%, which means that you're gonna say 110. 100 is always there. If they say increase by 20%, you're gonna say 120. Okay, and you say divide by 100, and you close the brackets. So we're gonna get the rate that we're gonna divide by, and we get amount before increase. Okay, we get 14,8. Okay, 14,8. We take the one that we got from our nominal account section, which is going to be 22200. Okay, so this is the amount that we have. Then we divide by it, and we by 14,8. It's gonna give us amount before increase, which is 15,000. Then 15,000 before increase, we have to calculate an increase of 10%. Okay, for 1 month is 1,650. And remember, the amount that we have to subtract is for March and April. We have to multiply by 2. Then we get amount of 3,300 that we have to subtract, because those months are in advance. Okay, so that's how we calculate it if there is an increase in percentage.
Okay, then after that you will get amount of 3,300 that you have to subtract. Okay, then after that you will get an amount of 18,900. Simple as that. Okay, then let's proceed to the next one. Okay, number 9, the payment for advertising was payment for 2 adverts. One of the advert will appear in the newspaper in March. So our year is ending 28 February. Remember, when we do income statement, we must do a cutoff. We don't record something that is in advance. We have to subtract them. Okay, and we have to make sure that if we record 10 months, we must add another 2 so that it can be 12. Okay, we have to make sure that we record 12 months for all income and expenses. So in this case, another advert that has been paid, it was for March. Okay, which means that half of the advertising amount we have to subtract it. Okay, advertising amount is 5,600. Okay, advertising 5,600. Okay, we must subtract half of this amount. Okay, so let's calculate 2,800. Okay, it's gonna give us 2,800 amount. Okay, we subtract it because it's for March and we are ending 28 February. We can't put something that is going to happen next year. Okay, because our year is ending in February. Okay, then the following one, a data deposited 760 into account and the data had previously been written off. Okay, a person that we have written off long ago come back and deposit 760. We call him bad debt recovered. A bad debt recovered under other income. Okay, it's an amount of 760. Once we write off someone and that person come back and pay, we call it a bad debt recovered. It's not a sales amount. Okay, then let's proceed. The bank statement received from the bank reflects the following: service fee and interest on current account. Okay, interest on current account is the one that we are going to adjust first. Interest on current account, where is it? Interest on current account is one part of interest income, 1,300. But interest income, we also have it on top. We have to add it as well. Interest on fixed deposit of 5,000 is also fall under interest income because we receive. Okay, but interest for loan and other stuff is for other expense, interest expense. Okay, and we also have service fee of 1,470, which is a bank charges. Okay, a bank charges we have 1 to 10 on top, and we also have 1 to 10 is from the nominal account section, guys. Then this one of 1,470 is from the one that we read. Okay, so if you add these two, it's going to give you 2,608. 2,608. Very simple. Very simple. Okay, then the next one is number 12. Water and electricity of 1,300 for February will only be paid in March. In other words, they recorded for 11 months and they didn't record for February because it's going to be paid in March. What do we do in this case? In other words, remember the principle that I say, we must not record 11 months, we must record 12 months, which means that we have to go and add this amount. Okay, 1,300 must be added from water and electricity amount of 24,000. Okay, water and electricity of 24,000. We must add what? We must add 1,300 so that it can be 12 months. Then it's gonna give us 25,300. Okay. Then the next one, the last one, but not least, insurance include an amount of 4,200, which is the annual premium for insurance payable on 1st of June every year. Okay, let's check insurance amount is how much. Insurance amount is 16,000. And what is insurance? Is 16,000. But we have 4,200. Let me show it here. This 4,200 is paid in June every year. So which means that we have some advance amount that has been paid in advance. Okay, let's count now. It's June, July, August, September, October, November, December, January, February. The applicable month is 9 months. The rest of 3 months is not for this year, which means that we're gonna say multiply by 3/12. 3 months is the one that we want to take it out here. Okay. Then if you calculate this 4,100 multiply by 3/12, you're gonna get an amount of 1,050 rand. Okay. Then if you calculate the total, you're gonna get an amount of 14,950. 14,950. Very simple. Okay. Then let's proceed. Okay, is the last transaction that we have. So which means that the other one we're gonna have, okay, interest on loan of 11,000. We have to record it here. Okay, which means that here we have to calculate a balance. 6,300. Okay, and interest expense that we have to get here, it must be 11,000. Okay, so this is how you should answer your income statement, guys. Before you start calculating those interest, those gross operating income and operating profit, you must first adjust all transactions that you have so that you won't have any omitted amount. Okay, then discount allowed, which means that we don't have transaction. is gonna be 1,800 from the account section, and the other one salaries and wages 120 and 900. Okay, what else is gonna be central expense is 3,400. Okay, then another one, we're gonna have okay, from the one I listed, I can't see any other one. Okay, we have trading stock. Okay, a trading stock, guys, this is what we have to do. Okay, before a trading stock, let's go and adjust a discount receipt of 9,000. Okay, then after that, which means that we can now get other income total, which is going to give us 28,660. 28,660. Simple. Okay, then I think after that, we can take this one plus this one is gonna give us operating income. Okay, operating income is gonna give us 322 410. All right, then after that, I think we're gonna left with donation we did, depreciation we did, and some other expense is fine. Okay, a trading stock. Okay, a trading stock, this is what you have to do. If you can check, we have a return of stock that we have. We must adjust them. The return of goods, as well as we have a okay, let's start it at the beginning. At the beginning, we have a trading stock of 38,000. We have 38,000. In other words, we are looking for different. At the beginning, we have 38,000. This is how you calculate a trading stock deficit. Okay. Then we also have amount of. Okay, at the end we have amount of how much? 29,000. Okay, 29,000, which must be subtracted as well. Then after that, we check transactions that affect a trading stock. We have them. I think there are 2 or more. Okay, let me check from the transaction that we read. We have amount of 7,500 from transaction number 2 of goods returned. Okay, for goods returned, we have to add back 7,500. Why are we adding back? Remember, guys, we are looking for what? For different. Okay, then after that, we're gonna adjust a good which was purchased. We have to subtract, but we have to subtract the cost price. Transaction number 1 of 4,500, we have to use the cost price of that amount, which was 2,250. Okay, 2,250. Okay, then after that, we're gonna have an amount of, let me check, transaction number 3, a donation stock 5,200. We have to subtract it, minus 5,200. Then the balance that we're going to get, we call it a trading stock deficit. Okay, then it's gonna be 9,050. All right, so after that, we will be done with all this transaction. What we need to do, we must calculate the total expenses. Okay, total expenses, you have to make sure that you add everything, guys, and confirm. Okay, then it's gonna give you amount of 214 and 90. Alright, then after that, now we can proceed and get our operating profit. How do we get operating profit? Expense, remember, we're going to subtract. 322 minus 214 is going to give you operating profit of 108 and 320. Very simple. Okay, then after that, which means that now we can say 108 plus 363 is going to give us a profit before interest expense. Okay, which is going to be 114. Interest income we add, obvious. Okay, because it's income. 114, 620. And profit for the year. Profit for the year is going to give you, remember this one of expense we're going to subtract, is going to give us 103, 620. So this is how you should prepare income statement, guys. So please don't forget to like this video and subscribe. So this channel is all about accounting from grade 10, 11, grade 12, which means that you're still going to use it next year and whenever that you're going to study after matric. So please make sure that you follow us, subscribe, and enjoy other lessons that we have recorded. Thank you so much, guys. See you on the next one.